But listen in to that press conference which is being addressed by top RBI officials after the announcement of the policy.
Swaminathan J, Dr. Poonam Gupta and Shri Shirish Chandra Murmu. We also have with us today Executive Directors Dr. Ajit Ratnakar Joshi, Shri Sanjay Kumar Hansta and Shri Indranil Bhattacharya. I also welcome my other colleagues from the Reserve Bank. Before we begin, we have a few housekeeping announcements. Sir, there are 24 participants from the media. I request the media participants to please stick to one question so that everyone gets a chance. I also request everyone to switch on the mic while speaking so that those watching the live telecast are able to hear clearly. And once you have finished speaking, please switch off the mic. Sir, with your permission, I will now call out the names.
Yes.
Thank you, sir. I will request Ms. Latha Venkatesh from CNBC-TV18 to please ask the first question. Over to you.
Thank you, Mr. Bridge, and thank you, Governor, for the opportunity. Well, the worry is not so much with inflation and GDP, with the numbers in transition. The worry is with the way in which near-term call rate and repo rate have fallen. Call rate and TREPS rate have fallen way below the repo rate. I mean, they're almost a percentage point between 4.25 and 4.75 actually. So what's the thinking behind allowing that kind of a fall? On the 1st of February, the question we would have wanted to ask you is, how will you manage this large borrowing program? The market was rightly worried and yields shot up. So that question as well. The immediate short-term fall in call rate and TREPS rate, is it intentional? What is your view of how it may evolve? And separately, this medium term, how are you going to help it? Will it be OMO in liquids? What's the expectation?
So let me say, as mentioned in the monetary policy statement, liquidity is something that is our duty to provide. Ample liquidity, sufficient liquidity as is required to meet the productive needs of the economy. That is the first task. And the second task, to be able to ensure that monetary policy transmission happens, not only in the overnight markets, in the money markets, in the government security markets, the corporate, the credit markets, all the markets. So whatever we do with regard to liquidity is keeping this overarching goal in mind. Now, the tools that we have for liquidity, you are aware, we have a number of tools for them, especially, OMOs, long-term, short-term, VRRs, VRRs, so as to be able to ensure that we give liquidity and we keep the overnight liquidity at the policy repo rate. That is the immediate target, to keep it over there, and then hope that this will transmit into all other markets. The transmission, you are aware, has been quite good, especially, till December in all markets. After December, there was slight hardening, as I have mentioned. There was some hardening in the money markets, but overall, transmission has been excellent. We will continue, as I mentioned in my statement, that we will continue to provide liquidity proactively and preemptively. This is not something, that the exact details is not something that we always or by rule mention in the policy statement or only, in the policy statement. Liquidity is a continuous operations that is done. So you have seen that we have provided liquidity even outside the policy statement, as we did, in later when we felt that there was a requirement for liquidity in the second half of January. We followed it up with whatever we had announced in the monetary policy statement. We followed it up with liquidity. So all I can say is that we will continue to provide sufficient liquidity with an aim that the monetary policy transmission happens in all markets.
Sorry to intrude, but there is no mention of the word switches or buybacks by you or by the government. So the market is worried in the medium term. Right now it is a little stupid to ask about the liquidity is so plentiful now. But in the medium term, do these things still,
Are you referring to the government? See, the government program, I think, again, we have been looking at the gross numbers, which I don't think really, is the correct way to look at it, frankly. The way to look at it is, we have been looking at, 17 plus lakh crore or something. But there are, much more redemptions this year, coming year, next year, than, there were last year. So as a result of that, the gross calendar will obviously, be higher. But if you look at the net numbers, 11.53 lakh crore is the number for this year, government securities borrowing program. Next year, it is projected, it is budgeted to be 11.73 lakh crore. It's only 20,000 crore more, which is, one would have expected at least, if the budget size is going up by almost 9% or so, 8 to 9%. GDP is expected to grow at 10%. One would expect a 10% growth. The growth is much less. We should really be looking, at net. Number two, also, you find that this year or in the year to come, there will be money will be raised also through the Treasury Bills, which will help, in further. I think it will help, in managing the yield curve better. And we also find that the budgeted numbers for small savings are also, quite conservative. So I think, the kind of numbers, the borrowing program that the government is looking is much on the lower side, and they should be able to raise these kind of resources at very reasonable prices. I'll request Mr. Ravi Shankar, to further add onto the switches, some 2.5 lakh crore of switches have also been planned. That will also, further help on the liquidity and the management of the yield curves.
That's right. And buybacks are not factored in at this point in time. They are factored in during the course of the year. To the extent there will be buybacks, the gross borrowing number to that extent come down. I just wanted to, Governor explained all the factors clearly. I just wanted to draw the attention to this sense that the, gross borrowing is large. We should put them in context. Look at 2007-8. We were borrowing 1.9 lakh crores per year. 2 years later, 2.910, we were borrowing 5.8. 3 times the gross borrowing. Was that managed? That was managed. You look at relatively. Look at 2020, 2021. We were borrowing about 7 lakhs. In 2 years' time, we were borrowing 15 lakhs. Right? So these numbers, go up. If you compare to that, the increase is nothing significant at all. I'm certain Reserve Bank will be able to manage the government borrowing program quite efficiently. Thank you.
Thank you, sirs.